It's time for another Southern California rental market update. We're here with the median rental rates and the number of units that have rented for Orange County, LA, and Riverside. We're going to add more counties. Make sure you stay tuned. And rents, for the first time in a long time, are going down. We're also going to share why rental market data sucks, and maybe not for the reason you think. And make sure you stick around to the end because we're going to tell you exactly what to do with these numbers. Hey there, Christian Walsh, real estate agent with Wire Associates. We're helping real people make real decisions in real estate. And we're here with the latest market update on Southern California rents. Why does rental data suck? Well, it's a very fragmented market for rentals. So some of the places online where you can find data like RealPage, they are tracking apartment data. So big professionally managed communities in big metro areas across the nation. The data for houses and condos that are owned by mom and pop landlords, that is not included in a report that comes from RealPage. That data can be tough to find because maybe they put it on MLS or Craigslist or Zillow or just put a sign up. It's very difficult to bring all that fragmented data together. We're going to use numbers from the multiple listing service and we'll consistently use those. But just know that that's just one fraction of the number of rentals that are going on at any given point in time. The other important point is that what numbers we are sharing, and the same thing that RealPage is sharing, is new rentals. It is not easy. In fact, there probably isn't a way to get into renewal data. And this would be apartments that the leases come up and they're renewing at a new rate. And we also aren't getting rental increases. So let's say they're month to month and the landlord decides to increase their rent. We don't have access to that data either. So as mentioned, the data sucks, but we're going to use what we can to figure out where rental rates are headed. RealPage is a great resource for information on apartments, but remember, like we talked about data being fragmented, these are apartments. This is different data from what we're going to find on the MLS and run those numbers, but rents are down. October marks the biggest drop in month-over-month rents that we've had since COVID, and you can see in their chart here that only April and May did we see a bigger drop month-over-month in rents. Other than that, it bounces between other Octobers and Novembers. Typically, rents are dropping in October and November, but this October is exceptional. And last October, rents were still going up as they had been going up for a while. So things are definitely changing when it comes to rents for apartments. And 110 of the nation's largest 150 metro areas saw drops in rent. So things are definitely changing. Just as we're seeing in the for sale market, we're seeing it in the rental market as well. Diving into the Southern California county data, we have Orange County, LA, and Riverside. We're going to add the other counties. Let's take a quick look. This is going to compare by unit type how many have rented per year, October 2022 being the golden line here. You can see that 3 bedrooms are down as compared to October of 2020. The numbers are down, and they're down as well for 4 bedrooms plus, and they're down for 2s. Of course, our email newsletter subscribers are going to get these charts. You can look closer. Now, there's 2 possible answers to what is going on here. The number of rentals being down for 2, 3, and 4 bedrooms could be related to fewer rentals being in the market. So it could be a supply side issue, or it could also be a demand side issue. The answer will come when you look at where rental rates are. And we're going to show you the median rates here shortly, but it is a combination of supply and demand where people are just waiting to see what happens. They're not moving in October unless they have to. Moving on to Los Angeles, we can see that for 3 bedrooms, they're moving. There's more than one under contract. Same thing with 4 bedrooms. There's more than one under contract. But 2 bedrooms, 1 bedrooms, there's fewer. So the other important thing to realize here is that 3 bedrooms and 4 bedrooms will include many cases houses. Studios, 1 bedrooms, 2 bedrooms, there's fewer houses that match those. So those will mostly be condos and apartments. Moving on into Riverside, we can see that the 4+ is a popular move this time of year in 3 bedrooms, but 2 bedrooms are down. Not many studios are available, not many 1 bedrooms. And here's part of what you came for the price of admission, and that is we can see the median rental rates, and we're looking at increases And in Orange County, despite things softening at a national level for apartments, we can see in Orange County that all of these numbers have gone up. But you can also see, in many cases for the different unit mixes, that the increase is smaller. Now, studios, that's a big increase, especially when you compare it to where things were in 2020. But you can see for 2 bedrooms, 3 bedrooms, it has increased, but it is a slower, more shallow increase. But you can see that these are big numbers. When you compare them to 2 years ago, the numbers are dramatically up for median rental rates. Moving into Los Angeles, here's where we have some backtracking in rental rates. So studios, even though there aren't that many that rented, the median for studios in Los Angeles, that has dropped for this year. We also see that 4+, where again, there's going to be a lot of houses in there, that has dropped. And the other unit mixes, there's increases year over year, but it's much more shallow than the increase between 2020 and 2021. So LA is certainly changing when it comes to rental rates. No studio data available for Riverside for the past 2 years, but seeing the other unit types, we can see that the rental increases have dramatically slowed. Everything's up a little bit, but it is a much slower increase year over year than it is if you look back last year versus the year before. So rents are definitely slowing on their increase. And again, another one where you look at the dramatic increase from 2022. If you look back at 2020, rents have gone up, but it is certainly slowing down in the increases. So landlords, what do you do with these numbers that I'm going through? Well, what you need to understand that the market has shifted. So if you have a vacancy and you're going to be leasing up a unit, you may want to be a little less aggressive on that new market rent. Additionally, if you are giving a renewal, maybe you don't push the renewal amount quite as much as you might have been able to before. Tenants, how do you use this data? Still understand that rents are very high in most areas, but things are softening. So you might be able to negotiate, particularly if you are a very high quality candidate with good credit and good income. So that's how you can use the numbers that we have just run through. Where do you think rental rates are headed in the coming months? Typically October, November, there are rent decreases. This October was a bigger one than normal. What do you think is going to happen in December and into first quarter 2023? I want to know your opinion. Put it in the comments below. If you want a closer look at the charts in this video, make sure you subscribe to our free weekly newsletter. We've got that in there, plus a whole lot more you're not going to want to miss as a tenant or landlord. And you're not going to want to miss this next video if you're a renter or landlord. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.